This conference will now be recorded.
Okay, please take just a moment to read over the risk disclaimer. Quite honestly, it is for my protection, but it's also for your protection, okay? You have to realize anytime you're trading, there is risk involved. I am not giving out trading advice. I'm just showing you the way that I trade based on my indicators, okay? Any questions on the risk disclaimer? Okay, now that we have that out of the way, I did do this trade in demo mode because I wanted y'all to see what an actual setup would look like. And we're going to start over on the right-hand side, okay? And you can see that this developed resistance on the 60-minute chart. The bigger plus sign tells me that that developed on the 60-minute time frame. Now, if I go and I just expand that out a little bit, do you see how it has the red and the purple lines here? So that also tells me, do you see it, Troy, or no? It's very, very faint, I know. I'll expand it out as much as I can. Okay, do you see how it has a red and a pink there? So that tells me that the 360 had a resistance area there and the 15-minute had a resistance area there, as well as the 60-minute time frame, okay? And it has come back and it has tested that area twice. It formed it here and then it came back to test it over here, okay? Now, as that came back and tested this area, okay, they put a lot of effort into it. The stochastics is showing you that. But you can also see that the ADX is showing you a bearish divergence, okay? Then when you go down to the 60-minute chart, you can see that you're making lower highs, okay? Now the entry was on this bar right here, okay? At the open of that bar. Now on the 15-minute chart, okay, these plus signs are highlighting the support or resistance on the 15-minute chart. Do you see how you formed that double top here as well? Okay, so this was your entry on the 15-minute chart, okay? Do you see how you're overextended here on the stochastics? Okay, so this meant all of these time frames are actually showing you the same thing, that the market is going to go down. That's one piece of it, okay? Now, the next piece is how much is my risk going to be versus how much my reward's going to be, okay? This is where I'm using the drawing tool in TradingView to show you. In this case, you're risking 10 ticks to make a potential of 20 ticks. Now, how did I come up with 20 ticks? Well, do you see the blue line in the line of plus signs here? This has been the area that has supported price. So isn't that a logical area to say, hey, that's probably where it's going to go? Does everybody understand that? Now that's using a risk to reward of $1 to $2, okay? So for every dollar of risk you had $2 of potential profit. Now, that doesn't mean that I will absolutely get that $2 of profit, okay? For example, right now, you're overextended here on both the stochastics and the ADX. Now, that tells me that more likely than not, price is going to pull back to this ATR, which is at 68.77, okay? So my entry was up here at 68.81. So my stop would probably be around 68.80. Now, that's going to cover the cost of the trade. You also have the option of saying, you know, I don't want to risk all of this profit. I don't want to risk giving this profit back. Okay. So what do you do then? Well, you would exit now. If it comes back to the ATR at 68.77, you may have another entry. Does everyone understand that? So even when I'm looking at the higher time frames, and when we're going to do that shortly, these are the type of entries that I'm looking for off of a lower time frame. Okay. And I'm not going to sit here and trade lower time frames all morning. I'm going to explain where I think the market's going to go, but this shows you a perfect example of why I would be entering a market. What would I need to see to enter that market? Well, this is showing you that. Okay. So let's go over here and start on the Aussie dollar. Okay. Now the 360, I've already identified, you know, what I saw on the 360. You can also see right here that you made a high on the 360. It came back and it rejected that area, which happened to coincide with the fast moving average. Okay. You can also see over here on the weekly that price is at the slow moving average. Now, the slow moving average is a really strong moving average. Okay. So it's not unusual to see that resist price. In addition to that, you're overextended on the stochastics here and on the ADX. That tells me we should get a retracement probably back to 68.01 on a higher time frame. Everybody understand that? Okay, let's go and the ones I went over yesterday was the USD JPY, the Euro dollar, and the USD Swiss franc. So I'm going to go over those real quick. On the Euro dollar, I did anticipate it moving down, and so far it has done exactly that. Now, notice that you have this ATR directly beneath price, okay? And this area is coinciding with the fast moving average over here, as well as over on the weekly chart. So we may get a very strong retracement off of that area. But what you need to see is that support either forms here or they blow through it. Do y'all understand? This is a critical area, in my opinion, as to whether it holds or not. If it does not hold, then we could see a potential test of this area down here. Does everybody understand that? All right, let's go and let's see what the the USD Swiss franc. Okay, now this is a long bar. They call it pin bar a lot of times. Okay, and it is red, but the way that that bar acted, yeah, this may go up. Okay, it's also coming off of a congestion dot, which would indicate typically that this is going to come back to this ATR, right? I mean, that's what I would have been anticipating. Here's the issue with that. They're potentially supporting price at this fast moving average. So when you go down and you look at the 360, do y'all see how that 360 formed that support area here? So you had a congestion dot below with a potential support area right up above it. That's telling me that they're rejecting that support area and they need to come back to this area up here and test for what? For resistance, because support and resistance is what moves the markets. Does everybody understand that? Now let's go and let's look at the USD JPY. We expected it to go down. It actually gapped down here. So unless you were in that long term, you missed that move. Okay. Now it's going back, and I think it's going to test this area right here. Okay. I think it's going to try to test either the fast moving average, which is here, or it's going to test this line of ATRs, and it's going to form a double top pattern. Okay. Why do I think that? Because look, they've got a gap there. That's a gap. Okay. In other words, from the close of Friday to the open of this morning, there's a gap. Typically, markets do not like the gaps. Okay. They need to close that gap. What's an ideal way for them to close the gap and still have a resistance area? They'll come back and they'll test this right here. Okay. Does everybody understand that? Okay, let's go and look at some of the markets I didn't look at yesterday. Okay, let's look at the euro yen. Okay, the euro yen, you have come back to the ATR here. Okay, but you still, do you see the gap here? Okay, this is the close Friday, and the open was about here. Okay, they need to close that gap, and typically they'll do it by coming back to this fast moving average. Okay, and that's what I would be anticipating. Okay, don't enter now. You're late to the game. Okay, wait, let them test for resistance, and then look at a potential entry. Let's go and look at the British pound yen. The British pound yen, you see that you're overextended here. This is starting to move down. You've had divergence off of it. Again, they're going to need to test that fast moving average, because that's the pattern they typically do. They break the fast moving average, then they'll come back to test it. You need them to come back and test it. I would prefer actually a double top pattern and then a potential downward move. On the British pound dollar, okay, you can see that here is where they formed the bearish intent. Okay, they found resistance here. You've also got the stochastics overextended. And if, and this is a big if, this bar continues to be bearish, then you're going to have a move potentially down to 23.59. Does everybody understand that? I think it's going to test this level again. It may even come up to 25.59. Why is 25.59 significant? Because it's the ATR from the weekly chart. Okay, if you notice over here, you had a magenta peak, formed the double bottom formation that rejected this low here, and that sent it back to the ATR. Okay, that's exactly what I would have anticipated it to do. Does everyone understand that? Okay, let's go look at the USD CAD. Now the USD CAD has come off of the ATR, okay, and then it formed the bullish expectation right at this fast moving average. Okay, this is normally indicative that the market will move up through this ATR right here. But in order to do that, what's going to happen? They're going to have to break through the ATR right here on the daily chart. Okay, so they came down to this blue dot, which I call the congestion dot. Now they went back and tested this ATR, and they did it on a very strong bullish move. Okay, so in this case, I would be expecting them to break through the 32.95 area. When you come down to the 360, do you see how they developed this resistance area at 32.88? Okay, it is going to be important to watch to see if they come back to this area. It is between 32.87 and 32.94. If that area holds, okay, we may see lower prices in the USD CAD. But if that area doesn't hold, then they're either coming to 33.60 or 33.77. Does everybody understand that? And you can see on the daily, do you see how they have rejected this area right here between 33.43 and 33.47? You can even fine tune that over here on the 360 by looking at the pink and the plus signs, okay? That's showing you the resistance areas of both the 60-minute and the 15-minute, okay? That's the reason I have that MTF support and resistance, because it very visually shows you this is where the rejection area is, okay? Any questions on the currencies? All right, let's go and let's look at the Dow. And again, the Dow, we were expecting it to come down to the ATR, and it did that. Unfortunately, it did it in such a way that you couldn't have traded it, okay? But you did have almost a 1 to 2 risk to reward ratio. Not quite, but almost, okay? So I'm going to delete these so we can actually see the charts now. Okay, and you can see that right now it's bouncing off of the ATR. Now, I would prefer that the stochastics actually be overextended when it started to bounce off of that area. Okay, that would make me feel better about taking that trade. As it stands right now, I would be looking at an area, and I'm just going to highlight it with this one. Okay, I'm looking at an area between here that it may go in actually test, okay? And if it does not break through that area this week, we're going to see more downward movement on the Dow, I think. That's just an opinion, but that's what I think. You are starting to see a lot of overhead resistance here, okay? Now, it could be that they're just trying to hold it in that area because we have FOMC this week as well, and they're expecting them to cut the rates, but they want to see how much they're going to cut the rates, okay? So this is the area that I would be watching for. Wednesday is going to be a horrendous day in my opinion because we've got so many market reports plus the FOMC. But again, this would be the area that I'm watching, okay? The lower time frames typically will tell you whether it's going to act as support or resistance. Let's go up to the ES. And again, we expected this to come down to the ATR. It gapped down to the ATR, okay? So now what's going to have to happen? Well, number one, they're probably going to close this gap, okay? But do you see how you have the overhead resistance here? You have the big crosses here. You have the dot over here on the daily and on the weekly chart. So that tells me out of the gate, there is a lot of resistance in that area. Okay. Those are the areas I'm going to be watching. Could you take a trade potentially to the upside? Okay. And let's just measure it from where it's at right now, okay? And the first measurement would be 12 points The next measurement would be about 25 points. I do think it will get up there. Okay. So that would be your profit potential. What would your risk potential be? And your risk potential would be from here actually to this low here. Okay. So that's your risk potential. Okay. And let's see. Let's color this red. Now, that's without going down, okay? Is 360 your main trading chart? No. My main trading chart would be over here. And that was my next point, Bonnie, okay? So we're thinking, okay, we're going to take a long position, okay? But I need to fine tune it, okay? And the reason that I need to fine tune it is because it's too much on the risk side right now, okay? So let's go back and look at this one, okay? You're looking at 17 points of risk with a potential at 30.22, okay? Now, that's important because I'm going to come over here and I'm going to put that line on here. I'll tell you what, let's do it over here. So we're going to put a line at 30.22. Now, this is the one that the higher time frame is saying that, hey, this is where they're probably going to come and test for support. Are you following so far, Bonnie? So I want an entry, okay, but I don't want to risk what it's telling me on the 360, okay? So what am I going to do, okay? Well, you did have an entry right here at these ATRs, but do you see how this is almost overextended now? This is where I'm going to wait, let it get back to 29.92 or even 29.89. Okay, so that tells me it's this area over here. I think I could probably use this area. Okay, do you see that, Bonnie? So I want price, and you see how that magenta dot just appeared? That tells me more likely than not it's going to come back to 29.95. Okay, if it comes back to 29.95 and it forms a bullish bar, okay, then I would consider entering, and instead of risking 17 points, I would probably be able to fine tune that to 4 to 5 points. Does that make sense now, Bonnie? Yes, I'm using the candlesticks for confirmation on that. So does that clarify how I'm using them, Bonnie? Now this one is telling me, okay, this is my profit potential. I do know that I have to look out for this fast moving average here. Do you see where these two are coming together? Okay. So I know I have to watch out for that area. Okay. So that's 308 to 312. So you can even come back over here and put another one. Do you see how that coincides with that area, Bonnie? You're getting a confluence of potential resistance here and here. And these lines on these smaller time frames will highlight that. That's why I like them. Okay. Does that answer your questions? Now, there are times where I will take this, but typically it would be like I'm overextended on the stochastics and the RSI and the ADX, and I know I'm going to get a really strong one. Okay. Exactly, Bonnie. There's a gap there too. It's reading all of the information that the chart is giving us. Do y'all see that? It's not just saying, okay, I'm at ATR, I'm going long. I'm at ATR, I'm going short. No. Okay. Does it correlate with the rest of the information? Okay. That's what I want to see. All right. So, you have this profit potential there. Can you fine tune it? Yes. Okay. But this is something I look at on every trade because I think that's what trading is all about. Okay. Let's go look at the Nasdaq. Okay. You see how you've got that gap, and this is unusual. We don't normally have this big of a gap, but we do today. Okay. Now, do you see how this is coming off of this strong ATR area here? So that tells me that your support area, okay, is right in here, okay? This is your support area, okay? What would I be anticipating? Right now, I would be anticipating this to either go to this ATR, which is highlighted by this purple line, or this area right here. Okay, so if we draw that using the little price tool over here, okay, from where it's at now, you should have been from this one, but we're looking at it now. So if I draw this, you're looking at 80 points, okay? And what are we looking at for profit potential, okay? So the first area I'm going to look at is probably this ATR, which is about 80 points. Now that's just a little bit, just a tad over 1-to-1, okay? Maybe 1.1, okay? But if it made it all the way up to there, that's where you're getting your 1-to-2 risk to reward ratio. Does everybody understand that? Now, could you fine tune this? A medium term trader would probably trade the 6-hour chart. Okay, they're going to be in their trade a couple of days, maybe even a week. Okay, I'm more of an intraday trader. That's where I come down and say, okay, what is the lower time frame telling me, and can I lower my risk? Okay, so on the lower time frame, using the 1, the 5, and the 15. By the way, I don't normally use this until the market opens and you get a lot of movement in there. That's when I start using the 1 minute. Do you see how this is overextended? You have the magenta dot. That tells me it's probably going to come down to about 78.38. Okay. So that means I'm probably going to have to use this area at 78.35. Do y'all see that? Now, my bias is that this market is going to go up and close the gap. This is just fine tuning an entry. Okay. Does everyone understand that? Any questions on that at all? And what would I do? I would do exactly the same thing that I just showed you. I would mark all my lines over here. You've got that, it's a strong area over here at 79.06. If we go back over here and we look at 79.06, it's going to close the gap right here. Do y'all see that? Right where these moving averages are, that's where it's going to close that gap. That's the reason that's such a strong area. Do you see how you've had this line of crosses here? That's telling you this is a strong area, okay? So you can always come back and do this, okay? Now you have an inverse risk to reward ratio. Do y'all see that? You're risking almost 80 points to make 50 points. That doesn't make good sense. Sorry, it just doesn't make good sense. Math don't work out. But could you fine tune that on an intraday basis? Sure. Understand? To me, that would be a scalp, okay? That would be a 15-minute trade for me from a 15-minute time frame. Everybody understand that? Now, delete some of this off so we can actually see it. Let's go and look at the Russell. On the Russell, do you see how they're rejecting this ATR? This red line is coming off of the ATR over here, okay? Right now, the daily is showing us a potential rejection, okay? You still have that gap there between 1580 and really 1575, okay? So, you know, I would think they'll come back and they'll test this area right here. And that, if they do that and they form the bearish bar, you're going to get what I would consider a miniature head and shoulders. And again, if I was measuring this from a profit potential, okay, knowing that this is going to potentially act as a resistance area, that's where I would measure to. And the reason that I think it is, you've got, and if I, let me stretch this out some so y'all can see it, okay? Again, this is just like the Aussie trade that I showed earlier today. You have that red line, a pink line in the ATR. You have 3 major resistance areas here from 3 different time frames, okay? So this is where you're going to measure to. Okay, now what about on the risk side? Because this would be the profit side. Okay, so I'm going to change everything to green. Now let's look at the risk side of it. Well, the risk side of it, if you went into this, you could use this plus sign. I would go probably down to the ATR on this one. Okay. And what is the first thing that should stick out at you? Inverse risk to reward, okay? You cannot trade that from a 360-minute chart. You have to go down in time because trading from the 6-hour chart is going to give you what? An inverse risk to reward ratio, which is not something that you want. If I was trading this from a 360, okay, I would wait and let it get up here, show me that they're rejecting this area again, okay, and then go short, either using the future contract or potentially a touch bracket to actually go short in anticipation that they're going to come lower, potentially down to the ATR here, which is at 1514. That's going to be your bigger trade. Does everybody understand that? Any question on that at all? If anything, this would be a scalp on a lower time frame, what I would call a scalp, okay? And from here down would be your trend trade, your stronger trend trade. That's what I like, okay? I think most traders would prefer shooting for a bigger trade with fewer trades per day, per week. You know, I think that's every trader's dream, okay? Sometimes we get it and sometimes we don't. This week is going to be harder to get because of FOMC right in the middle of the week. You know, Tuesdays, usually you'll get a good move. That morning, Wednesday morning, you'll get a good move. And then Wednesday itself is dead unless you want to trade FOMC. It's kind of over by 11 o'clock. And then it just goes dead until FOMC. And see, FOMC is going to be so volatile, Bonnie. It's probably going to be hard to trade a touch bracket from it. And it's going to be hard to trade the futures from it only because you're going to get an extreme movement. So you have to have extreme risk, which I don't like having. All right. And I think we already did the Dow Jones, didn't we, guys? Yes, it probably is, Bonnie. Very similar to the wave 3 on the fib. And what you'll find a lot of times is when you use the fibs, normally the ATR will actually coincide with the 50% fib line in a trend, okay? If you're doing a market reversal, okay, then the ATR is more than likely going to coincide with the 30 fib. I think, what is it, 33%, 31, 32, one of those. It's not exactly 30. Yeah, 38, thank you. And quite often, they will coincide with those. Let me go to the 15-minute because I have an auto fib. Okay, the bright green line is the 50% line. Do you see how the ATR was right up above it? So then it pulls back, okay, and then it goes up. And you'll see that quite often. It's just like right now, if it gets up to here, your 50% line is right here at this ATR. And it's just something that I've noticed when I had the fibs on there. And I was like, well, you know, that's nice, but I know my ATRs, so I just go ahead and use them. It just gets to the point where I've got too much on my chart. Any other questions? I always have a target. Always. I do not go in a trade without a target. And I don't necessarily set it at a predefined, you know, okay, my risk is 8 and I'm going for 16. especially with this new indicator. I pretty much know the patterns with it. Okay, so I know exactly where I'm going to target. Yeah, this one here that has the big plus signs on it. Okay, those are that's a new indicator. It's called multiple time frame support and resistance. And I haven't released it to everyone yet, just the coaching members right now, because I have to do the training videos. No, not necessarily. It's a mixture of lower time frame and higher time frame. So for example, this is the 1 minute, okay? One time frame up from that is the 5 minute. So these crosses are telling me this is from the 5 minute. And do you see this different colored lines, the pink and the green? They're coming off of the 15 minute. And I can set them either way. I can do the higher time frames or I can do the lower time frames. Do you see right now you developed over on the 60 minute? You see this pink line here? Okay, so it developed resistance here, then the 5 minute developed the resistance area here. In other words, they came right back to this high off of the 15 minute, and the 5 minute showed that they were rejecting it. That's what's unique. Everybody else just does higher time frames. This does both. Does that answer your question, Bonnie? Any other questions this morning? I do appreciate everyone joining us this morning for the webinar. I will be having them every Monday. So as long as you are a subscriber, then you'll get the notifications. I am, Bonnie. I want that support and resistance on both, on really it's actually 3 time frames. To be honest with you, because if I really blow this up big, okay, this is the 60 minute, this is the 60 minute. I know for a fact, and behind that one is another very faint red line. So this is telling me you've got the 1, the 5, and the 15 all developed resistance in that area. Just like you can see it very clearly over here on the 15 minute. The 15 minute, the 5 minute, and the 60 minute all developed the support area right here. Yeah, I've been immensely impressed with this. And I did it because I can see this looking at 3 time frames, but clients were having trouble seeing it. So a lot of times the things that I developed is because my clients aren't seeing what I see. So I tried to program an indicator that will show what I see. And this one just did a perfect job of it. Okay, any other questions this morning? I do invite you to visit TradersHelpDesk.com. We do have a membership package that includes all of the indicators for TradingView or NinjaTrader TradeStation or multi-charts for 1 year, and the coaching sessions that I do on a weekly basis. And typically I hold webinars Tuesday, Wednesday, and Thursday for those members. And we look at chart patterns as well as the markets that I've looked at today, and teach you really how to read the charts and identify the entries using our indicators. Yes, you subscribe to them on a yearly basis. I was doing it monthly, but I decided just to go yearly with everything. It's less work on my part. And a lot of times, I mean, really to learn the patterns, you pretty much need to look at it more than a 30-day period. Is there a daily trading room? No. I do the Tuesday, Wednesday, and Thursday sessions. Sometimes we go for 30 minutes. Sometimes we've gone for an hour and a half, 2 hours. It just depends on what we're doing and what we're learning and how many questions you have. Okay. Any other questions this morning, guys? I will post this on the YouTube video page. Let's see, what time? Normally we start at 6 o'clock. Well, we do start at 6 o'clock, and that's New York based times. Okay. Actually, no, Troy. We just look at markets. You know, if you want to know how touch brackets work, then I show you how they work. Okay. If you want to know binaries, I'll show you. Okay. But is it just about binaries? No. The only thing that I don't actively trade right now is the spot forex. Yeah, I still do stocks too. But right now we're not doing stocks. Number one, FOMC, but also we have the expirations, and I do weekly stocks, Bonnie. So when there's no weekly expirations, we don't do stocks. Am I doing trades during the 6 a.m. session? Yes, sometimes I do. They will always be in a demo mode environment, though. I can't teach and trade at the same time. I'm not that coordinated. It really kind of depends on what's presenting itself at that time of the morning. On the 1 minute, you just got a rejection of that area because they came back, tested it, and that was your rejection bar right here. And this is a typical pattern that you'll learn in the coaching sessions where they'll go up and then they'll break through and then they'll test again. I mean, that's really what the markets do. They test for support and resistance all day long. And I have used the 3 minute before, Bonnie, but right now it's just been so volatile, I'm not using it. See how you've had this bullish divergence over here on the 15 minute? That's usually indicative that it's going to come back down. They need to test for support. I have to watch my wording here. They need to test for support. That's what it's telling you. Any other questions this morning? I do appreciate all of you joining me for the webinar this morning. I will have another one next Monday. Well, where each originates from, Mike, is set by you in the indicator with time frame 2 and time frame 3. Time frame 1 is always going to be the chart time frame. Do they disappear only as the chart is building, Bonnie? In other words, this might have started out as a harami, a bearish harami, but as it continued to build, then it would disappear. But as long as the formation stays, then it stays. And it has to be that way if you're updating intrabar. Yes, you have to wait. For example, the moment that this started saying bearish expectation, okay, the close was less than the open, okay, and as long as it maintained that, that would be maintained. But the moment that it became a green candlestick, it wouldn't. Yeah, and typically it's going to plot just as the bar opens. You know, either you'll get a bullish harami or something else. You know, I've seen all kinds of things, but that's because I do have it to update intrabar, okay, because I'm watching as the bar is developing. All of them are set to update intrabar, okay? So for example, if this one, if it's going up and then you get a strong enough bar, it may come down, but then if it reverses, it will go back. I mean, that's with anything that's intrabar update, okay? Because it's using the closing price, okay? Which is the current price, 78.40. Well, if this suddenly went to 78.42, that would change your formation. I don't always wait for the bars over here to close, okay? Because what I'm doing is time and entry over here. This one, this bar here, already said that this was potentially coming down to here, okay? So you're using this one over here just to time your entry. It doesn't take a lot for a 1 minute bar to close. Okay. All right, guys. I hope everyone has a wonderful trading week. Be careful on Wednesday. And please visit my website at TradersHelpDesk.com. And everybody have a wonderful day.